It's another day that we're going on with our revision for business data analysis, and today we are going to look at a question on group cash flow, consolidated cash flow for group, whereby we shall be dealing with the two items in this category, whereby we shall be dealing with disposal, we shall be dealing with acquisition later on. So today's question we shall be dealing where a group of companies, they are disposing, the holding company is disposing of the entire subsidiary that it had acquired some years back. So we need to create or to prepare cash flow for that effect. So our question reads: the following draft group financial statement relates to H Limited, a public limited company, and its investment company. So we have the group statement of financial position for year 2021 and 2022, and we have the group statement of profit or loss and other comprehensive income for the year ended that 1st October 2021. Additional, during the year ended that 1st October 2021, H Limited disposed of its entire 80% of its equity holding in S Limited for 310 million in cash. The carrying amount of the identifiable net asset of H at disposal date comprised of these items. So he had a net asset of 300 as at the disposal date. The gain or loss on disposal of the subsidiary is included in the administrative expense. The disposal of S Limited is not classified as a separate major line of business or geographic operation. The investment in S had been acquired several years ago at a consideration of 230 million when the fair value of identifiable net asset stood at 250 million. The group policy is to measure, so essentially to measure the non-controlling interest in all subsidiaries at their proportionate share of the net asset at the acquisition date. Then an impairment test carried out on that 1st October showed that goodwill other than that arising on acquisition of S Limited was impaired. Other intangible assets were also impaired. H Limited disposed of plant with a carrying amount of 560. The gain on disposal is included in administrative expense. Depreciation charge to profit or loss during the year amounted to 260. So here there is a statement, just a minute, I will correct that. H Limited disposed of a plant with a carrying amount of I think it was 440. It's a typo. Carrying amount of 440 million. Shillings 440. Yeah, so it was shillings for 40 million, so that was a typo whereby it was omitted. Just yeah, 440, that was now disposed at 560. We shall deal with that later. And the following schedule relates to the financial asset. The financial asset at fair value. So again here there is a repetition. It relates to the financial assets at fair value. Delete this part. Okay, financial asset at fair value through other comprehensive income held by H. You can see those financial assets. The sales proceeds of the financial assets were 360 million. Profit on sale of the financial asset is included in the investment income in the financial statement. The profit for the year attributable to non-controlling interest amounted to 390 million. So I required the group statement of cash flow for the year ended 31st October 2021. 31st October 2021. So I will just copy this. So I'll prepare my statement here. This is H Limited. H Limited. Okay, just a minute. So group statement of cash flow. Group statement of cash flows. So for the year ended 31st October 2021. Okay. And merge that, and this one I can center. Okay, and I bold that way. I'll start with operating activities, and when you look at our operating activities, we start with the profit before tax. And our profit before tax, we had a value of, just picking profit before tax, we had 1617. We shall add back whatever we had in the income statement, starting with finance cost. Our finance cost, to make create it here, our finance cost here, but now we need to put it, we add it back. We'll put a negative because it was negative here, we needed to add it as a positive. Then you have we are adjusting what was included in the income statement. Investment income is not part of operating, so we shall add this back, and in this case we shall put as a minus investment income. Okay, so here our investment income, I'll put it as a negative. It's negative what? Investment income, that one, so negative 270. And the other one, we have what? The share of associate, this one, share of associate, share of profit and income from associate. Again, this one we minus, it was added, the 90, that way. And I think we're done with what already we know that was directly included in the income statement and was not supposed to be part of our operating activity. So just format this cell, just see, yeah, I format this, need to include bracket to be my negative. I replace that with negative with brackets, that way. Okay, and I need it that color. Okay, me again format the color, the font. Okay, the color should be black, color. Just a minute. Okay, don't want to fill. Yeah, okay, so we continue now. So those are our what we have already adjusted there. So the next thing we had depreciation, and our depreciation for the year already had been told in a note here. Yeah, Depreciation charged to the profit or loss for the year was 260. Let me just put 260 here, as equals to 260. There was some gain on disposal. This disposal that happened here, the plant with a carrying amount of 440 was sold for 560. Gain on disposal of plant, gain on disposal of plant, which will be equals to 560 minus 440. Yeah, it was a 120. And I'll put a negative. We'll close this bracket, then here you'll put a negative, that way, negative 120. Then we had what else? And gain or loss on disposal of subsidiary, which is included in the administrative expense. So remember, for the subsidiary that we sold 80%, we had acquired it for 310. We sold it for 310 and it had a net assets of 30, and the investment in S had been acquired several years ago for 230 when the fair value of identifiable net assets stood at 250. So if I can even do it here, these are the goodwill disposed, you'll find that this will be equals to we had acquired it for 230 minus into bracket 250 by 80 by 0.08. so that will get the goodwill was 30 that we disposed. So that means our gain on disposal will be we sold it at 310. We minus the net asset that we sold. Net assets was 300 minus 300 multiplied by 80, what we sold, and we also minus this one, the goodwill that was unimpaired. Find that we had a gain of 40. Gain on disposal of gain on disposal of subsidiary. Gain on disposal of subsidiary, where we have seen we had a gain of 40 there. I need this to be in Times New Roman 1 to 12. Okay, so this gain I'll put as a negative. That way. What else do we know? Investment income already we have accounted for. Okay. So the next thing, we calculate the goodwill impaired. Goodwill impaired. And this will be, when you look at our goodwill at the beginning was 1080 and at the end was this, but this one is sold 30. So the proportion that was impaired therefore will be equal to this value. We minus 30, the one that we disposed, and just pick it. 30 somewhere here that we disposed, and we minus at the end of 945. We get here a goodwill impaired of 105. Impairment of other intangible. Impairment of other intangible. Intangible assets. Other intangible assets here. Other intangible, at the beginning we had 18 and at the end we had 1350. so they were impaired at 450. The other one, you calculate depreciation. And depreciation already we had it. We had already the depreciation. I think that's we can get our cash flow before working capital, cash flow before working capital. So here I'll put alt equals, we need this sum. Up to there, that sum, and here I put alt equals this one, the two of them I put equals. So I'll bold this and I put top border on that. Okay, I go to working capital. I will look at the movement in current asset and current liabilities. Looking at the inventories here, what happened to the inventories, what happened to the receivable, what happened to the payable, yeah, those three items. When you look at our inventory, it started with 1710 and it was a decrease here. 1710, we minus what we sold in note number 1, sold inventories of 90, we minus the value at the end of 1395, so it decreased by 225, and the same will apply to the receivable that way. And we come to the payable. The payable, we started with what? So this was again a decrease. Payable, it was a payment. We start with this, we minus the value at the beginning, and we minus into bracket the value at the beginning minus what we sold. We sold what? Payable of 60, so here we'll put plus that value, I put okay, so we'll get 745. Then the cash flow before tax, cash flow before tax, cash flow before tax. So here you put alt equals, so here I'll extend, I'll just capture that and I enter, and again here alt equals, so these two, and I enter. So we'll use top border and I will bold that value. That's our cash flow before tax. Can deal with tax paid. The tax that was paid will be equals to, so here we had our deferred tax to the beginning, so I need it to be a negative, so I'll take the figure at the end and open the bracket, this one deferred plus the current of 440 and what was disposed, and we'll also add, so I need to add, so I will minus what was disposed it has been included as a negative. The deferred, I minus that, and I close that bracket, minus the values at the beginning, open the bracket, deferred tax, we add the current tax, we add the value in the income statement, income tax expense, so here we'll minus, so that it turns out to be positive, and I close the bracket and I enter. So we get that we had a tax of 1760. We get our cash flow, and cash flow from operating activities. Cash flow from operating activities, alt equals the sum of the two, alt equals the sum of these two, and I enter that way. So I'll bold this and I put the top border. That is the first part of this question, the operating activities. So the cash flow from that operating activity have gotten to 35. So now look at the second part of our question, and the second part we're looking at, we have looked already at operating. We look at financing activity, not financing but investing activities, investing activities. I'll bold this. The first thing we look at the disposal, proceeds, disposal proceeds. We sold plant, we sold plant in note number, the whole sale of plant in this note, plant with the carrying amount of this was sold at 560, so we realized 560 here from the sale of plant. And the other thing, we had the disposal proceeds on I call it what, financial asset. So financial asset, it was note number, this last note, the sales proceeds from financial asset was 360, so we sold financial asset at 360. The other thing is the disposal of subsidiary, and subsidiary sold it at 310, but it had cash, so we shall minus, it had cash of what by the time of sale? It had cash and cash equivalent of 30, so you can get that we received 280 from the disposal of subsidiary, 280 from the disposal of subsidiary. Then the other thing, we had the investment income, Remember our investment income here, we had a value of what? We had a value of investment income including dividend, we had 270 here, but I will minus the one that we sold. I minus into bracket, I will minus 3, so I will minus the financial asset, where the financial asset was sold. When you look at the financial asset that was sold, it was sold at 360 and net book value was 235. and your total profit on sale of the financial asset is included in the investment income. So in this case, I will minus 360 plus 360, I add the carrying amount. Okay, so the financial the gain will be 360, and so we record the gain, so which we are taking 360, and I minus these, so I will add this value because already it's minus, and I close the bracket and I enter, whereby it will give me the gain of 145 from the investment income. Then the other thing is dividend from associate, dividend received from associate, dividend received from associate. When you look at the associate company, the associate investment, we had 810 at the beginning, and at the end we had 720. So we shall take 810 is equals to 810 plus our income that we received in the income statement, the share of profit of 90, and I minus the value at the end. The value at the end was 720, so we received 180 from the investment in associate. Then you have the PPE, acquisition of PPE. You look at the PPE, we started with what? We started with 4185, so this one, and we minused what we disposed in this note, and also we minus what we sold for 440, this 440, the one we disposed the plant, and we had a depreciation of 260 again, and we minus the end value, the end balance. Our end balance was this value. We'll get, now we had revaluation, we shall add revaluation now. I think we had revaluation of 65, we had a revaluation of 65 here. We add revaluation, we'll get that we have a value of 935. Yeah, 935 as our acquisition of PP. We acquired financial asset, acquisition of financial asset, acquisition of financial asset, acquisition of financial asset. That one already we have, put as a negative. Financial asset here, yeah, we here had purchase of financial asset of 515, so it will be a negative, that one 515. I think that's all that we had there. Yeah, that's all that we had there. So we get the cash flow from investing, cash flow from investing activities, cash flow from investing activities, and I will put alt equals this sum up to that. Yeah, so we had 75. Go to the next, financing now. Financing activities, financing activities, financing activities. I will bold that, financing activity, and under financing activity we start with issue of shares, issue of shares, When you look at our share capital, the movement of share capital here, ordinary, at the end we had 8, and at the beginning we had 6. So we issued shares valued at 2000. Revaluation rate we have captured. We look at the retained earnings, the dividend that we paid, dividend paid, by holding company, dividend paid by holding company. So we shall deal with this, the retained. At the beginning we had 31.35. We add the income for the year. The income for the year, profit for the year was 1260, but out of 1260 we had 390, the last note. Yeah, 390 was attributable to non-controlling interest. We minus the one for non-controlling interest, and we minus a closing balance. We closed with what? 37. You enter. So it means this one will include a negative at the beginning. Okay, that's not correct. So we shall have the dividend is supposed to be 290, but which will be a negative. Let me put bracket there and bracket here. Then at the beginning now I will put the negative sign that way. Yeah, 290 is okay now. Negative. Then dividend paid by the NCI. Dividend paid by non-controlling interest, the NCI. So when you look at the NCI, they had equity attributable to NCI. At the beginning they had 585, and we added their share of 390. We added their share of not their share, we shall minus now. We shall minus what they disposed. They disposed, I will open, they disposed in note 1. Note 1, they disposed these net assets by 20%. By 20%, and I minus the value at the end. Value at the end, and see at the end was 810. I'll get that value. So it means again I will put the bracket minus, we'll put the bracket, and I put the bracket at the end. So they had negative 105 as a dividend that they paid. The other thing is the finance cost. Just pick it directly here, the finance cost, and here what we paid, this value we paid 100 as our finance cost. Then the loan, you look at the loan, long-term loan, it decreased, so we repaid the long-term loan. It was a repayment of the long-term borrowing. I will take the end balance minus the beginning, so that we get it as a negative, because it was a repayment of that loan, repayment of the loan. I think again that's all that we had there. Cash flow, we have the cash flow from financing activities. Cash flow from financing activities, and here I'll put articles, and I will highlight up to from here, and I enter that way, and I will bold this cash flow from financing. I bold that, I bold this, and I bold this, and I bold this, and here now we get the cash flow for the year. Cash flow for the year, cash flow for the year, and our cash flow for the year multi equals the sum now. That one I enter cash flow for the year. I will bold that, and I bold this, and I put the top border for that. We have opening cash, and a cash equivalent. Then you have closing cash, and a cash equivalent closing cash and cash equivalent. So our opening cash, which is our balancing figure here, cash and cash equivalent, at the beginning we had that value, and at the end we had this 4185, and we shall look at it. Then I put the top and bottom border, so I'll just control it here to see whether we have gotten our value. So I put alt equals here, alt equals, we need these two, we'll find that it is giving us the same value, 4185, 41. So that's how the question was supposed to be done. We have proved that actually it is reconciling. Let me edit this. This was opening cash and cash equivalent. So that's how you deal with the group statement of cash flow, and in this case we are dealing with disposal, where we are selling one of our subsidiary, a complete sell off of 80% of what we were earning. So you prepare the operating, you prepare the working, you prepare investing activity, and you prepare the financing activity, and you get your 20 marks, because normally these questions are worth 20 marks. And that is all for today's lesson. So continue subscribing, continue following this channel for more and up-to-date revision as we are preparing you for the August examination.